Economic troubles are getting worse. We've been talking about this for a while, and I believe a recession is coming in a few months. Jeffrey Gundlach, a respected figure in finance known for his sharp economic insights, says there's a big economic storm on the horizon that could wipe out $4 trillion in 2024. To put it in perspective, that's about 20% of the US GDP. In this video, we dive deep into Gundlach's predictions, giving you a complete understanding of his views on these important economic signs. One key indicator he mentions is the 30-week moving average of the yield curve, and when it crosses back above this average, it's a strong sign that a recession is close. The unemployment rate has risen by 40 basis points and is expected to continue increasing, likely surpassing its 3-year moving average in the first quarter of next year, signaling an impending recession. Several challenges, including a potential government shutdown, student loan repayments, and tax payments, point to a rapid economic slowdown in the next 4 to 6 months. Listening to Jeffrey Gundlach is crucial due to his impressive financial background, including a mathematics and philosophy degree from Dartmouth College and a PhD in mathematics from Yale University. He is known for accurately predicting market trends, notably foreseeing the mid-2000s housing market collapse, which elevated his status as a respected financial authority. Recent news of a 27% drop in home sales compared to June 2007 is reminiscent of the turbulent times in 2008 when the housing market crash triggered a series of financial crises. Gundlach's keen insights into interest rates and government bonds underscore his understanding of economic trends. He also warns of potential trouble for the US dollar, foreseeing a shift away from its sole reserve currency status due to specific policies. This shift is expected to lead to a decline in the dollar's value. The US dollar's vulnerability is significant because of its role as the primary global reserve currency, granting the United States substantial economic influence and unique advantages. Gundlach's perspective on the dollar's future is based on historical analysis and a nuanced understanding of macroeconomics, acknowledging the profound impact of the dollar's strength or weakness on both domestic and global economic conditions. His predictions are the result of a comprehensive evaluation of multiple contributing factors. Gundlach's assessments factor in elements like interest rates, fiscal policies, geopolitical tensions, and trade dynamics, making them highly influential in the financial community. One of his key analyses focuses on the implications of a stronger or weaker US dollar. A strong dollar can reduce domestic inflation, but make exports less competitive globally, while a weaker dollar can stimulate export-driven growth, but raise inflationary pressures. The dollar's performance impacts various economic activities, from trade balances to consumer purchasing power, offering valuable guidance for investors and policymakers. Gundlach's concerns extend to the budget deficit, with interest expenses accumulating and the deficit already at 8% of GDP, potentially surging to 12% of GDP. He notes 2 long-term secular indicators that have shifted twice during his career, suggesting that the next bond rally, triggered by a recession, may not be as prolonged. He anticipates a response to the next recession similar to the past 2 decades. Interest rate cuts and likely quantitative easing, which could have inflationary consequences. If you're finding this video informative and engaging, kindly consider hitting that like and subscribe button. Every like fuels the algorithm and greatly aids our channel, and your support is genuinely appreciated. Anyway, let's get on with the video. The looming recession could necessitate radical policy changes to address the dire state of the deficit. Understanding the US budget deficit is crucial as it signifies the gap between government spending and earnings, influencing decisions on taxes, spending, and borrowing. This deficit is a vital indicator of a nation's financial health, impacting interest rates, inflation, and long-term economic stability. A growing deficit may lead to more government borrowing, potentially resulting in higher interest rates and inflation. Gundlach's assessment of the current deficit involves a deep dive into its expansion drivers, analyzing spending patterns, revenue trends, and policy decisions to assess its sustainability. Gundlach's primary objective is to determine whether the current fiscal policy trajectory supports long-term economic stability or if it carries potential risks, such as increased debt burdens and inflationary pressures. The consequences of an expanding budget deficit have a widespread impact on various aspects of the economy. One significant concern is the potential effect on interest rates and government borrowing costs. A large deficit may drive up demand for government bonds, leading to higher interest rates and affecting borrowing costs for both the government and the private sector. Furthermore, a growing budget deficit can introduce inflationary pressures into the economy. As the government borrows to cover its expenditures, it injects more money into circulation, which can potentially potentially lead to rising prices. This inflationary dynamic has implications for consumer purchasing power, business investment decisions, and overall economic stability. Assessing Gundlach's influence on market sentiment and decision-making is essential, given his deep insights into these critical economic matters. Jeffrey Gundlach's influence is profoundly demonstrated in the market's reaction to his predictions. His reputation for making accurate forecasts has positioned him as a leading figure in financial circles. Whenever Gundlach issues a statement or prediction, it resonates throughout the market, impacting investor sentiment and, consequently, asset prices. There have been notable instances where Gundlach's statements on interest rates, bond markets, and broader economic conditions have led to significant market movements. This phenomenon underscores the weight and credibility his perspectives carry within the financial community. However, it's essential to note that, like any influential figure, Gundlach's views are not immune to critique and controversy. They are subject to scrutiny and debate, as is common in the dynamic and multifaceted world of finance. Critiques of Jeffrey Gundlach's forecasts may revolve around the specificity or timing of his predictions, as economic conditions are inherently complex and subject to numerous variables. Furthermore, the diversity of economic ideologies and perspectives within the financial community can lead to contrasting viewpoints, generating healthy debate and discussion. The ongoing discourse surrounding Gundlach's views contributes to the broader economic conversation, fostering an environment of critical thinking and intellectual engagement within the financial community. In summary, Jeffrey Gundlach's impact on economic discourse is significant. His insights into the US dollar and budget deficit offer a vital perspective for interpreting and navigating the economic landscape. His track record of accurate forecasts, backed by a deep understanding of economic principles, positions him as a prominent voice in financial discourse. Jeffrey Gundlach's assessment of the US dollar's role in the global economy and his nuanced predictions about its future provide valuable insights for investors, policymakers, and financial analysts. Similarly, his evaluations of the budget deficit act as a crucial guidepost for understanding the impact of fiscal policy on economic stability and growth. As an influential figure in the world of finance and economics, Jeffrey Gundlach's legacy is extensive. His contributions to economic discourse, marked by accurate predictions and insightful analyses, have made an enduring impact on the financial community. His perspectives continue to shape discussions on critical economic indicators, influencing both market sentiment and policy considerations. Looking ahead, the lasting influence of Jeffrey Gundlach serves as a reminder of the significance of astute economic analysis and its impact on economic decision-making. As the economic landscape evolves, Gundlach's contributions will remain a valuable resource for those seeking to navigate the complexities of global finance. Thanks for watching. If you found this video valuable, please like, subscribe, and share your insights on the stock market crash in the comments below. Your input is appreciated.